Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Gav Blaxberg. He is the founder of Wolf Financial. We're going to take a look at digital media distribution trends. Of course, we'll talk about the outcome of Jackson Hole and some retail investor trends as well. Gav, it's great to see you as always. Welcome to Trade Talks.
Thank you so much for having me on, Jill.
Yeah, and give us a little bit of background behind Wolf Financial, because the growth in such a short amount of time, how you've built that community is really quite impressive.
Yeah, Wolf was born out of Twitter Spaces really becoming a thing because although we started beforehand, Wolf was relatively small before the burst of social audio. And when social audio became a thing where people could go live and have these conversations where the masses could tune in without video, I think it completely changed the game. I love the act of talking with people, the back and forth, but there's something about being on camera all day that's difficult to do. So removing that element allowed it that now I could go live 40 hours a week and just have these conversations, be live trading, bringing on different people and access so many more. So that advent has really changed the game. Nowadays, we do, like I said, 8 to 10 hours a day live on social media. We bring on investors from all around the world, and we have about 10,000 people a day tuning in on Twitter Spaces. So that certainly helped grow the audience to where it is, where today we're just 300 off from 100,000. So pretty excited to be there.
It really is exciting. And you know it's catching on when Cardi B did her first spaces today. So you're starting to see celebrities and influencers really leverage that as well. So, kudos to you for really being one of the first to pioneer that service. So let's talk about how some of your guests and audience reacted to what came out of Jackson Hole. Fed Chair Powell kept his statements very brief. Nothing was really changed in terms of the messaging.
Yeah, despite the maybe not a lot being changed in terms of messaging, I'd still say he was fairly hawkish coming out with the tone that he did, certainly leading towards a 75-point basis hike. And as we all saw, that just tanked SPY off the bat. So I went live this morning at 10 a.m. EST so that people could come in, tune in, trade live with us, get live reactions as Powell was talking. So we were actually watching on one side and then live on the other side, just bringing that information right to retail who maybe couldn't access it or fully understand what was going on. Immediately we called out SPY puts. We were like, we're getting SPY puts here. This looks super hawkish. We're giving up the lows of the day from previously. And we just watched that trail down. And we just had a lot of commentary around, at least this is now out of the way. We're moving into next week. Next week, we expect it to be pretty choppy. I don't expect a big move to the upside or downside just from where we're circulating. But yeah, it was interesting news coming out. Like you said, I don't think that there was anything that was necessarily new, but it did reinforce that inflation is here to stay. The government understands that it's a very tough job to get that under control, and it's not going to be something that's corrected in the short term, which led to that negative sentiment, which dragged the market down, even on a day where, to be honest, there were some positive items that came out. There was some great news out of China, I think, that we're seeing more transparency with the overall regulation. And so we actually traded some Chinese names because that's what we do on these daily basis. We're either playing puts on these bad days or we're just looking for relative strength.
Right. And it's interesting, Gav, I want to get your thoughts around the retail investor, because you do have a lot of younger investors, and we've had that buy the dip mentality and not much volatility, but we've been through a prolonged period of time now with the more volatile market environment. How are the people within your community digesting that news and evolving their trading styles?
Great question. And we talk about this almost daily on Spaces because you really do have to adjust from where we were a year or two ago, or even 6 months ago. The first thing that we've been really emphasizing is risk management. And that comes in two forms. The first form is position sizing, and the second form is knowing when to cut a trade or when to take profit. So right now, the position sizing, and I actually ask any of my speakers, whenever they come in and they take a trade, I ask them to tell us, what trade did you take? What strike did you take it at? What was your position sizing? Where are you going to cut this at if it goes to that section? That way, the audience has a full understanding of just how much risk someone's trying to come in and take. So someone this morning called out that they were looking at Amazon calls. They were 0 DDE, so they were very volatile. And I said, okay, that's a volatile play. How much are you risking? They said, well, I'm taking 10 contracts. Okay, that's $130, right? They're $13 a contract. And now the audience can actually picture exactly how much risk they're looking to take. And the person saying, and I'm completely okay with this going to zero. I've had a great week. I'm riding profit. So we try to explain to people the concept of using your profit, of rolling trades, but then also cutting on the upside and the downside. It used to be you could swing things day to day and wake up another 100% profit. And now I get 5, 7, 8% profit. And I'm telling people, start trimming, right? We're taking contracts here, we're getting off. And to the downside too. It's not, some people are very comfortable being down 40, 50, 60%, but I find that that's not the majority of retail. And for people, it's a balance always, right? It's a balance between your mental and your money is kind of how I like to put it. And you have to, at some point, sometimes just take these trades off and then look for a reentry or look for another play or look for relative strength elsewhere. So I'd say definitely the risk management side has been a huge thing that we've been pushing to the audience. And also, above all else, I'll kind of end it on this. Cash is a position. I think people have been pushed so far out of cash, right? These inflationary worries, but like my financial advisor likes to say, it's not going anywhere. So that's how we roll.
Well, Gav, having been in trading and now media for over 20 years, I have a couple more years under my belt. I think these are such wise lessons that you are putting forth to your audience, because again, when you are conditioned to buy the dip and to your point, go to bed, wake up with, 100% profit, that is not how markets typically function. You're looking for those 6, 7, 8, 9, 10% plays, to your point. And there's an old, expression, shoot for singles and doubles, not always shoot for the fences, because risk management, and it sounds like a lot of your community is trading options, is so key. You're able to establish your entry and exit points more effectively. And also the concept of leverage can make them a little bit more risky. So being able to have those conversations, establish your entry and exit points, and be disciplined and realistic, these are the best lessons you can learn. They're more important than just making 25, 50, 100% or more on a trade. So amazing job that you guys are doing. I think it's an important job that you're doing to keep people invested and in the markets for a long term, not just, quick home runs.
Exactly. And two pieces on that. One, it's also knowing your style, right? Some people are never ever going to touch options in their life, and that's totally fine. And we try to just give people those options because in addition to having these fast trading spaces, Wednesday at 1 p.m., I'm having a long-term investing space. It's just breaking down long-term portfolios, talking about great ads at the moment. I recently added to Google. That was something I put in my portfolio. It's a company that's not going anywhere for a long, long time. Instead of just following, take the takeaway of why did they do this? And then understand the why, and then you can go ahead and make your own trades, because at the end of the day, nobody's going to be there to handhold you through everything. Even if you're paying them $500 a month for their Discord or whatever it is, you're going to get worse fills, late information. You have to be able to understand how to learn how to do it. So that's my biggest goal for my audience, is not that they follow us into trades and make, $1,000 a day or anything like that. It's that they learn a style of investing that fits them well and fits their risk profile so that they can ultimately build wealth in the short term or the long term. Either way is fine.
Yeah, it's great. I could have this conversation every single day with you. It's just so valuable, Gav. We appreciate your time. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.